Big seesaw for the day. After a big down day yesterday, markets bound back up on Thursday. The S&P 500 up 1.81%. The NASDAQ 100 up 3.27%. We see bonds down, gold down. Thanks for being with us. This is the Daily Review for chartingwealth.com for Friday the 26th of October. Let's jump into these exciting markets. We still have a big down week as we look at the candle. One more day of formation on the candle. Big down wick on the weekly candle. Still streaming down hard on our main indicator. That is the price percent oscillator, derivative oscillator, continuing to gain lots of downward momentum. We have a market that is pushing down quite strongly, even though up for the day just under 2%. We go from the weekly to the 2-day. And again, just finished drawing the latest 2-day candle, and it is a strong down candle. Price movement well below the 2-day and the weekly. Derivative oscillator losing a little bit of downward momentum, but that price percent oscillator still spiking down. Now let's look at the real dig into the meat. Down in the morning, somewhat of a recovery in the afternoon. These are Heiken Ashi candlesticks. The trainings are available at our website, chartingwealth.com, but you see the derivative oscillator losing momentum. You want to understand what these Heiken Ashi candlesticks are really about. Take that training at the website. Also good training on the derivative oscillator. It's losing some downward momentum. Price percent oscillator heading up, still in a down move. So again, even with that upshot, still down, didn't cross over going up. So keep your eye on the prize. If the market really starts to bound up in the morning, you can pull the plug and take your profits. If you did not already, some of you did when things really shot down. And of course, what do we tell you to do when you're doing your virtual trades? When you enter your trade, always enter a good till canceled sell order at whatever profit you would be happy with. Always do that. Why? Because you can have crazy days like we had yesterday where the market just pounds down strongly. And what do you want? Well, you want to be there ready to take that profit and let the market give it to you, and you don't have to think about it. You get in there and get out. But again, just one more tip. So that's where we are on the S&P 500. Again, things still looking good on our down trade. We'll continue to keep an eye on the prize. Now, big bound up on the NASDAQ 100. That is QQQ. The cubes, what we see is going into our third week of strong down movement. Huge wick on the bottom of that. So again, for as much as the bulls have tried to pull the market up, the bears have tried to push it down. So far, the bears are winning, but the bulls sure have created a long wick there. Derivative oscillator gaining downward momentum. Price percent oscillator still spiking down. Looks like it's going to be a strong down week. We see that the candle, of course, on the 2-day chart is, gosh, at least 1.5 times the length of the candle is the wick. We see the derivative oscillator losing momentum, but that price percent oscillator still spiking down on the 2-day chart. What do we see on that 4-hour? Well, again, even with that strong up movement, still hasn't recovered all that it lost from that big spike down in the afternoon on Wednesday. So keep your eye on the prize. We'll see how the markets start off in the morning, tepid or not. Watch that 4-hour chart. Remember the 2-day chart and the weekly chart, particularly that weekly chart, still in strong down momentum. But we had up movement in the morning and then paired off a little in the afternoon. That's not moved up strongly in the afternoon, paired off as far as we see with that wick on top. So we'll continue to keep our eye on things, and if there is a crossover going up, make appropriate decisions. Remember, price movement still well below the 2-day, well below the weekly. So keep your powder dry, pay attention, watch those markets. That's where we are on stocks. We'll go from stocks now to bonds. What are bonds doing? Well, still an up candle, a green spinning top. Some indecision, not as much, of course, as a doji, tending up. We see the derivative oscillator losing downward momentum. That price percent oscillator not moving down at the same speed that it was before. We go to the 2-day chart, And of course, it is trying its best to cross over going up. We shall see. Derivative oscillators already popped over. Of course, still a bit of a sideways slide, even with the price movement that you saw throughout the course of the day. Still didn't hit where it closed, where the closing candle was back on the 2-day candle on the 15th on our Heikin Ashi candlesticks. So again, some recovery going on that 2-day candle, even with the down movement for the day. So we'll just continue to keep an eye on things. And of course, we've since pushed through the 2-day, still below the weekly. So we'll see if there's going to be enough momentum to start spinning that up. And you can, of course, see the sideways slide after things really peaked out back on the 23rd. And we'll just keep our eye on things when it comes to the 20-year bonds. Okay, that's where we are. Go from bonds now to our last chart. Always gold down 0.23% for the day. Green up candle still for the week. Derivative oscillator gaining upward momentum. Price percent oscillator losing a little bit of that upward movement, but still going up. What do we see on the 2-day chart? We can see where on that 2-day chart we had things sort of slide sideways. This latest candle's pushing through the, it pushed up and still above the 2-day trend line. We see the derivative oscillator losing some momentum. Price percent oscillator also still moving up. What do we see on that 4-hour chart? It just won't cross over going up. It just won't do it. So we'll keep our powder dry, watch, see what happens. If and when gold does cross over going up on the 4-hour chart, that'll be our move to jump in. Derivative oscillator sliding sideways also. So keep your eye on things. That's where we are, folks, as we end the day. You want to help us out at the channel, purchase our book. We've got some special trainings here at the end of the program. Hit any of those, and it'll take you to them. If you're listening to us via audio, of course, all the trainings available at chartingwealth.com. Do subscribe to our YouTube channel and sign up for our daily market reviews, which, of course, puts you in line to receive the weekly comprehensive review and forecast that we'll put out at the end of the market on Friday. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.